This video is part of the series of important takeaways that I think some of us have issues with that I want to make sure that we address. So in this video, I'm going to talk about a simple concept that yet sometimes can be confusing to students, and that is dealing with averages. And an average in its simplest form is we take a set of numbers, like in this case we have 4 numbers, we add them up, in this case 14, and divide it by the number n, or the number of observations we have. So 14 divided by 4 equals 3.5. Okay, in this particular average, in averages that we do this way, we really don't think about the weights that we are assigning to each one of these. But what we have technically done is an average of equal weights. So by you summing this up and dividing by 4, you're basically saying 14 times the fraction 1 over 4. Now what this fraction implies is that each one of those numbers is being given 25% weight, or a quarter. Okay, so even in its simplest form, this average that we are referring to as a plain average is really a weighted average. Okay, so I'm going to just add here that, or not add, but the title here, averages and the corresponding weights, implies that every average that you always do is a weighted average. And this is very important for us in accounting because we constantly have to deal with weighted averages, whether that is, and what I mean by weighted averages, unequally weighted averages. So this one right here that I did is equal weights. The average here is 3.5. So in other words, if you go in there and say, okay, if you assign a quarter or 25% weight to 2, you multiply 2 times 25%, you get this number. You multiply the remaining, each of them, by 25%, and you sum them up. That gives you the 3.5 equally weighted average. But as I was saying a couple minutes ago, or a few seconds ago actually, in accounting we have to constantly work with different weights. And the reason we have to is because it might not be representative to apply equal weights. So in other words, if you were trying to determine, for example, the interest rate, the average interest rate that you pay for all the loans you have in a company, okay, and one loan is 2%, the other one's 3%, and so forth. If I just sum them up and divide by 4, like I did here, then what that's implying is that I have equal amounts of each type of loan, and that's not always the case. So, for example, you could have a large amount at 5%, a small amount at 2%, in which you at that point have to decide on different weights. So here's where I give you the example of averages without equal weights. So assume that these are the weights that you are going to be applying for each one of those numbers that we just looked at. So in other words, let me make this up. Let me make up the idea that this is interest rates. Loans here, and this loan is 5 million. Okay, so if 50% of all the loans we have is 5 million, the remainder of these three have to be 5 million as well, the other 50%. So I'm going to say that this one is 500,000. This one is 1 million. And this one would be, oh, I'm sorry, it should be a 10. Sorry. So this is 2 million, 2 million, and this should be 1 million. Okay, there we go. So in other words, you do not know these weights first. I gave them to you, but I want you to think of it as if you did not know those weights. So you have these interest rates, and you're asked to compute the average interest rate for all the loans. And now I'm telling you, oh yeah, you have these loans right here. So the total amount of loans that you have is 10 million. So what you would do is to come up with the weights, okay, for the weighted average portion, you would say, okay, this equals, and I'm not going to let it calculate so you can see, this equals 1 million out of the whole 10 million, okay, and that's where I get the 10%. So that's what this 10% is all about. Once you weigh and say what portion is this loan out of the total number of loans, and when you do that, then you're applying unequal weights. So having seen that, you can appreciate how this simply implies that each loan is of the same amount. So for example, how did we get 50% over here? This would be equals to 5 million, that particular loan divided by the total number of loans. So that's your 50%. Okay, and you do the same thing right here for these as well. But the idea is this, that once you have these weight factors to consider, then the use of an equal weighted average like this might be misleading. So in other words, look at this weight that this average here. If I compute my weighted average expenditures, I'm sorry, my weighted average interest rates here, then I get 4.1% given a distribution of loans like this. So what that means is that on average, we pay 4.1% interest rate. That is very different than saying 3.5. Okay, if it really is that our loans are distributed like this, then we need to give this 5% more weight, just like we did right here, 50% weight. Okay, now the use of these weighted averages, like I said earlier, is extremely important for us accountants. We use it in everything. So we use it in what I just described right here to do this kind of computation, and in many other areas. When we have lump sum purchases, you buy a whole bunch of things at a deal. Well, the way you break down what gets, what each asset gets in terms of a value is based on a weighted average of the fair market value of those things, and then you can split up the amount. And that's just one little example. Now, for you, when you look at your grades, for example, okay, so when you look at your grades, you'll do a weighted average calculation. So you'll say, okay, test one, how much is that worth? Maybe you got 88% on it. You got 88, and then you're saying, okay, what weight do I give it? Whatever weight the professor tells you. So if it's 22%, then you multiply it times 22%, and you get whatever that is. Now, and then, in other words, this test number one with a weight of 22% counts as 19.36 out of your total points. Very important. When you do weighted averages, okay, the weights always have to total 100%. Okay, so this always has to be 100% because you have to account for the whole thing. I'm going to highlight that. So this will be in the red. If I sum this up over here, I'm going to get 100%. It always has to be for it to make sense. Again, that's in red, just to highlight that. And if you were doing your grade computation and you're summing up these weights, okay, this would be 22%. If you want to look at it that way, or 0.22, same thing. When you sum these up, whatever they are, I don't know how many items there are in your grade, but when you sum this up, this has to be 100% as well. And then that means you account for everything. When you do this regular average that you've always done, that's also 100%. Okay, why? Because of this demonstration here, which is the same as that. All right, so be careful with averages, and the conclusion is understand that every average is a weighted average. The question is it an equally weighted average or a not equal weighted average?